So here's an example of Fibonacci failures in some of the trades I used to take but don't take anymore because they don't work for me intraday. Maybe you use Fibonacci retracements and have found a successful way to do it, but I found there to be too many retracements. But if you look at the move off the lows in the E-mini NASDAQ this morning, it was at 8:20 a.m. and then it made a high at 10:30, and it pulled back to this looked like a perfect trade setup to me. If I want to go long. And you could do this with a low risk entry. And so 61.8% is a Fibonacci retracement level. And it also comes into 8750, which is a big number that is oftentimes supported. But you have to also look at the other indexes as well and the correlations there. And so this is the type of trade. This is the way you would set up a Fibonacci retracement. If you use the Fib tool in TradeStation, you can pull this out, and Fibonacci is a number that many traders use to buy a retracement. So if the trend, for example, is up like this, you want to get in on a pullback. The Fibonacci numbers are 38%, 38.2%, and 61.8% are some of the most common Fib numbers. And so I have not had much success in recent years trying to use this. I find these retracements end up going 110% and then coming all the way back. And so then the trend is down and you try to short the rally and then it keeps going that way. So Fibonacci retracements on day trades are very tricky. It's possible that you found a way to do that, but this is an example of how to do it, how to use the Fibonacci tool, and how to think about it. But it's one example of an approach that has not worked for me, and that is Fibonacci retracements.